What's going on, guys, and welcome back to my YouTube channel. My name's Antonio, and in today's video, I'm going to be breaking down how I use the DXY when trading USD pairs. Remember, if you're not already subscribed to the channel, make sure you hit that subscribe button so you don't miss any more content. And for those of you wondering what services we provide, we actually have an automated trading service where we will do all of the trading for you. It's completely free to join. All we ask for is 30% of the profits. So if you want to get started, just drop me a DM on Instagram and I'll get back to you as soon as I can. Now let's not waste any more time. Let's jump straight into the video. Okay guys, so I'm gonna be breaking down how I use the DXY as a Confluence for trading USD pairs. So to start with, the DXY is basically just the US dollar index. So it's telling us the strength of the dollar as a whole. So on this chart, for example, if we're downtrending, it shows that the dollar is weak. If we're uptrending, it shows that the dollar is bullish and it's strong. So we use it as an indicator when trading currency pairs like USDJPY, USDCHF, GBP USD, Euro USD, anything with USD in it, it helps us as a confluence. Because for example, if the dollar index is bullish, then it will show that, for example, USDJPY and USDCHF should also be bullish, and GBP USD and Euro USD should be bearish, as an example. So the first thing I do is analyze the chart. As I would with any currency pair, I want to tell whether this currency pair is bullish or bearish and where it's heading to. So the first thing I see when I come onto this chart is clear as day, an inverse head and shoulders pattern, which you guys know is one of my favorite chart patterns. It is a bullish reversal pattern. So I'm going to drag this across here. We can see that this side over here is our left shoulder. Down here is our head. And if I drag this over here, this is our right shoulder, okay? So that's clearly showing an inverse head and shoulders, which is a bullish reversal pattern. Where did the right shoulder retest to? If I use our Fibonacci retracement tool from swing low and I drag that up to swing high, we can see that it's pulled back to the 61.8%, which is the golden zone essentially on the Fibonacci sequence, okay? It's a very, very good level to come from. Now, what you guys can see is we've had a nice bullish impulse away from this. First thing to kind of notice as well is the phases of the market, okay? We've had a nice bullish impulse move there, followed by a bearish correction. And that's what we want to see. If we're looking to buy the market, we like to see bullish impulses followed by bearish corrections. And this is what I mean. So we like to see a bullish impulse move. That means buyers are strong in the market. They're impulsively buying and there's more buyers than sellers within the market. And then what we want to see is a bearish correction, okay? We want to see a slow and corrective move to the downside, which is telling us that buyers are taking a break and sellers are basically just trying to drive price down, but they're doing it in a very weak way, which shows that essentially, sellers are not active in the market. And then at the end of this correction, that's where we want to be buying and looking for that next impulsive move to the upside, okay? So it's essentially, the way I like to call it is impulse, correction, continuation. And the same thing would happen if you're looking for bearish positions. You'd have a bearish impulse followed by a bullish correction, and then you're looking for that bearish continuation. But obviously in this case, we're just looking for bullish moves because we've had the bullish impulsive move followed by the bearish correction. I'm going to jump down to the 1 hour now, because what we can see in a bit more depth is the way we were trading essentially within this bearish descending channel. As you can see, price is trading within this descending channel, and we've now broken away from this. Now, a lot of you might be thinking, well, we've already had the nice impulsive move, we've missed the move. Well, that's not the case. I'm going to jump back up to the 2 hour, because the way I like to measure a certain move is I like to use the measuring tool up here, price range. I'll drag this from this swing low to swing high, and we can see that move is around 1,500. If I just drag that to where we've just taken off from now, you can see that essentially we've still got a lot more to move, at least this kind of level up here. And we can see that that lines up with a nice level of resistance in the market over here. So we can say that price has still a lot more of potential to move to the upside, okay? Jump down to the 1 hour again. How am I going to be looking for the price to essentially come up to here? Well, we have just had a nice impulsive move. I'm going to be looking for price to pull back to retest previous resistance here as support, okay? I'm going to be looking for price to correct to the downside, and then I'm looking for that next impulsive move. Like how we had it here in a lot more of a bigger form. We had an impulse and now we're correcting. I'm looking for the exact same thing here. we've had an impulse, we've taken out the most recent lower high. So we're now obviously in bullish market structure, looking for that correction followed by that continuation. But remember, I'm not trading the dollar index. I'm just using this as a confluence for my USD pairs. And that's what we're going to go into now. We're going to go into USDCHF and show you how I would use this for my USDCHF trade. Now, for those of you who've seen my most recent video on YouTube on USDCHF, we can see that we have moved as we've expected. We've moved to the upside, and we can definitely say that the USDCHF is in bullish market structure now. So it just backs our analysis even more, because the US dollar index is now bullish and we're expecting price to move to the upside. Is exactly the same as USDCHF, how we're expecting price to continue moving to the upside. Now, where am I expecting USDCHF to kind of come to? I'm going to do the exact same thing. So we've obviously just previously broken through this level of resistance in the market, and we're now on our next impulsive move. You can see how we slowed down at this level. So this was our impulse move here. So we had price move all the way up here. We've now just started again, and we're essentially, what we're going to be waiting for is price to pull back to this zone here. Sorry, I should have mentioned that. So I'm expecting to see a correction back down to this level here for that impulsive move once again. Like how on the dollar index, sorry, we're expecting that correction for that continuation. I'm expecting the same thing on USDCHF to pull back to retest previous resistance as support, and then I'm going to be looking to buy that market. But as you can see, the level we're expecting price to come down to, we still have a lot more upside potential. And as the second wave is normally the biggest, I am expecting price to come up to this level up here. So I'm going to be expecting to see price come up to that level there. Okay, so what else can I add on to here to kind of make it a little bit better? So we need to know where we're going to be entering the market, where we're going to be targeting, we've already kind of established. But now we also need to know where we're going to put our stop loss. So first thing I'm going to do is I'm going to use the Fibonacci retracement tool again from swing low here, drag that to swing high. And we can see how the 61.8% lines up with our previous level of resistance, okay? So it's a nice level for price to come into. So happy with that level there for price to move down to the 61.8. However, where are we going to put our stop loss? So we can do a couple things. This is all dependent on you as a trader. So for me, I know that my win rate is around 40%. So I only need around a 1 to 3 risk to reward to be profitable in the long term. So I'm going to have my stop loss below this low, because I know that once I drag this up, that this is going to be like a 1 to 5 move if it comes in, which is more than enough for me. So I'm happy to put my stop in a very, very safe place. But if you're someone who might have a much smaller win rate within the market, maybe you have a 20% or even a 10%, then maybe you want to have your stops a bit tighter. Don't just do it randomly. Don't just have your stops tighter for the sake of it. But in this instance, we do have the 78.6%. So we might want to put it below there, which makes for a much larger risk to reward. It's obviously a much riskier trade, having a tighter stop, but it's all dependent on you as a trader. If you're a trader who has a small win rate, then you have no choice but to do this. But because of our win rate, I'm more than happy to put it below this. It's a very safe stop loss. So it all just depends on you as a trader, where you want to be putting your stop loss, how tight, but make sure you're doing it in a calculated way. Don't just be making your stop losses tight for the sake of it. Make sure you're doing it, in a calculated way, essentially. But anyway, this is what I'm looking at on USDCHF. I'm expecting price to kind of move to the downside, tap the 61.8, which will trigger a buy position, and then we'll be looking for price to move up there. Now, we are very bullish right now, especially looking at the DXY. So there isn't anything saying that we're going to pull back, which means if we do kind of keep moving to the upside, then we're going to just be looking for more positions later on down the line. We might see a correction here. We might see a correction here. There's a lot of upside potential. So we just need to be careful, but there will be positions along the way. We might start creating more structure, and we might create a resistance to be used as a support there. So there's loads that we can do, but we just have to be patient. And the same goes for the DXY. We might just continue moving up to the upside. It might just be a trade that we miss, but we've got our positions. We know what we want to wait for. Now it's about just being patient and allowing the market to come to us. But yeah, guys, that is how I use the DXY to add a confluence to my USD pairs. I hope that was helpful, and we'll go into the outro right now. Thank you for watching this video, guys. I hope you enjoyed it. And if you did, make sure to leave a like and a comment letting me know your thoughts in the comment section below. And remember, if you're not already subscribed to the channel, make sure you hit that subscribe button so you don't miss any more content. Have a great rest of your week, and I'll see you in the next video.